Hello, 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 and welcome back to the podcast. Thank you very much for being here. Today, we are going to talk about if infinite banking is legit, if Mary Jo is legit, if this is all legal, because 3 times in 1 week, this is what I have heard. And many of you that are listening to this are coming into contact with either that question yourself or from other people. And I know that I have talked about this before, but it seems like if it's been a long time, people are maybe not going back to the old podcasts or whatever. Now, if you are listening to this and you are a client, we still have registration available for the client only think tank or the client only conference, the Black Sheep Summit. So if you are wanting to come to that, there is still registration open. Early birds have been closed, so it is a higher price, but still an opportunity for you to come. One more thing. I almost forgot. You guys, I have in the past done a lot of the same podcasts on farming without the bank and without the bank, and that is not happening any longer. I am doing 2 different podcasts. They will not ever be repeated on the same podcast, or the plan is to never repeat them on the same podcast. So if you are listening to Without the Bank, but you are not subscribed to Farming Without the Bank, make sure you go over to Farming Without the Bank and subscribe. It is not all about farming, okay? So there is going to be stuff on both of these that you are going to want to go back and forth for. So make sure you are subscribing to both of my podcasts. If you have not given me a 5-star, please do that. If you listen to me on Google Podcasts, they suck. Okay. I use them. I don't like them because I cannot get Without the Bank uploaded and Farming Without the Bank. For whatever reason, it only lets me do one. And so find a different podcast app to listen to them on. Apparently, they're going away in a year anyway. That's what everybody keeps telling me. I like the use of that app, but it is not friendly for me to be uploading both of them. So if you don't know that I have two, I have two. All right, let's get into it. So let's talk about if it's legit, because so many people are getting this question. And yesterday I had a potential new client who was asking this, and rightfully so. But I could tell just by his questions that he was getting this from people he had been talking to. And so I actually said something, and yep, it came out that that's what was happening, right? He talked to his banker, and his banker said, "Oh, I don't know why that would work." And his banker's daughter apparently is a insurance agent, but the banker did not take the time to read the book. He asked dad about it, and dad's like, "Yeah, I don't really get it. I got the book, I read it, in 2015, but I don't really get it." And so dad never took the time to learn it. Dad never paid attention to it. And so this person that I'm meeting with has all these negative outside noise coming to him, and he is trying to figure out, is this a legal thing to do? Is it really legit that it will work? The only option he had, right, is me to tell him that. Well, let's be honest, like, you don't ask the person trying to teach you and sell you something if it's legit. Like, you have to know in your gut, and you have to do some more research. Because if you guys have not heard me say it before, I totally thought this was the biggest scam in the world. I was like, I just got taken on some Forex trading stuff. And so I thought, well, this is just another scam. And so this is not legal. But I did my due diligence. Instead of just listening to all the people around me, I did my due diligence and thought, oh, well, this is crazy because this actually is legal. It's on the website. Like, it's on the state insurance website that you can borrow against whole life insurance. I didn't know anything about life insurance. I didn't know anything about anything. Okay. I was extremely new to that situation, but it just clicked in my brain that makes sense. So why wouldn't people do it? And so the big question is, well, if it's legal and it's so awesome, how come people aren't doing it? Well, if you read my book, you hear me go over that, or you see me go over that a little bit in the book. That think about this. Almost everybody had whole life insurance prior to 1970 because all that existed was whole life and term. There wasn't universal life, variable life, indexed, and there wasn't 401ks and IRAs. So 401ks and IRAs started in 74 and 80. Well, what happened is nobody was really in the market. And so now everybody got in the market and the market took off and it soared for a long time as companies were saying, hey, we're going to add 401ks. You should be putting money in an IRA. The government came in with this great new plan. And so what pensions used to be were annuities. Now they're moving pensions out of annuities, which is a life insurance product. They're moving pensions out of an annuity into the market, into 401ks, into IRAs, into mutual funds. And so now everybody thinks the market's doing great because it's got this 15% rate of return, and everybody thinks that's going to continue that way. What? People still feel there are people like Dave Ramsey who are still talking about 15% rates of return. That happened in 74 and 80, Dave. It's not happening today, my friend. The average is not there. The actual is not there. But we're still using those numbers because it makes our agenda look really good. Anyway, okay, I digress. So now what happened is people said, oh my gosh, I can go get this huge rate of return. So I'm going to get rid of my whole life because the rate of return is at 15%. And I'm going to buy term and invest the difference. Okay. That is when buy term and invest the difference became a thing because the market was high. People were canceling whole life. I have a family member that canceled his whole life to go into the market. Then the life insurance companies just got stupid and they created universal life and variable universal and indexed universal to compete with the market. Instead of actually telling people how to sell and teach what they have, the insurance companies created all these other products that are not any good. And so when people say, why don't we know about it? It's because the people that do know about it and the people that had it are dead or in nursing homes. All right. Most of them. But it's funny because if I am ever early on, I used to do radio ads. After the ad would air, all these old people would call me and tell me how awesome their whole life is and how they're using it for retirement. Well, that was wonderful. I'm glad that I had the testimonials, but I wanted clients. I wanted people to understand what I was doing. It was a testament to the old people had it. And the people that truly understood it didn't cancel it to go chase some rate of return. So many people think, oh, this is new. It's 200 years old. Whole life insurance is like the first thing around. This is not new. Maybe the structure of the policy is newer. And when I say newer, meaning, oh, we've got a paid up additions rider we can add on there. So that piece might be a little bit newer. But at the end of the day, old fashioned whole life, which is just all your money going to buy whole life, which people think is so expensive, is what used to be sold. It's there your entire life. It's not term. We're not chasing a rate of return. Cash value has always been available to use. Always. That is not something new. So after you've read the book and you're talking to people and they're telling you that this is a scam and that this doesn't work like this, it's always worked like this for 200 years. It's just that the noise of go buy term and invest the difference and go chase a rate of return has taken over. And then we're getting advice and we're getting feedback from somebody that's not actually read the book. Now, once in a while, you may run into somebody that says, well, I tried that and it didn't work. Or I had a family member that had whole life insurance and it's no longer there and they died without it. My friends, that was not whole life. That was universal, variable, or indexed universal. It was not whole life. Now, I have seen a product called interest sensitive whole life. Okay. That is not actually whole life. It is universal life. And so if it is not straight up whole life, it is not going to be there for our lifetime. And it is going to collapse, but it's not the right product. So I wish it was just super easy to be like, oh yeah, this is the only thing you have to buy. And that makes it easier for you to try to explain it to people, but it's not that easy. And so that's why I try to educate you on what all these different types of insurance are and why they're good and why they're not good. It's not just for me to be on here ranting and raving. So when people are asking you or people are commenting about how this doesn't work and how this is illegal and how Mary Jo's not legit, they don't even know what they're talking about. And so beware of who you're taking that feedback from because you've read the book. If you've met with me, you understand it. And sometimes you're getting pushback from a spouse who hasn't sat through the meeting or won't read the book. And if that's the case, you're just banging your head against a wall. Because until somebody actually reads the book, until somebody actually understands what's going on, they're not going to believe it. I'm not in jail. I'm in my office. I am not in jail coming to you from jail because I did something illegal. I am merely teaching you how to use a tool that has been around for 200 years. I had this young guy yesterday. He just didn't know. Even by the end of the meeting, he just wasn't convinced. He thought it was too expensive. And so obviously somebody's been telling him it's too expensive. And we actually looked at what the cost of term was versus the cost of whole life. We took his numbers and we started with $800,000. If he was going to have $800,000 until he was 85, his cost per dollar of death benefit was 50 cents if he did term insurance. It was like 17 or 18 cents if he did whole life and he could live past 85. If he did term, he couldn't live past 85. And then, he's like, well, people say I'm not going to need it. Okay, so you tell me that you know for a fact you are going to need zero money after 65, 75, 85. Zero money. Zero. That is not the case. We are going to have inflation, right? We don't know if we're going to need a new home. We don't know if we're going to need a new car. There are so many things. We still have to pay taxes. We still have to pay property taxes. We still have to pay our water bill. We still have to pay our electric bill. We still have to pay for garbage. All these expenses are still happening. And people think, oh, I'm going to live on less. How are you going to live on less when we have 4% inflation? It's just not going to happen. And then there are people that say, like this young man, his dad said, well, I'm too old. And I knew it was coming. I think I said, oh, your dad probably thinks he's too old because he's 55. You're not too old. And so there's all these objections that you run into and all these excuses, and not a one of them is validated with a fact. And so if you are looking and wondering, can you actually do this? Yes, because guess what? The insurance company has thousands and thousands and thousands and thousands of people insured. I don't know the exact number, but I have thousands just myself. And so if the insurance company has 100,000 people insured, how is that not working? How are they still in business? If whole life is a scam, how come term isn't a scam? Why is one insurance better than the other? We just need to ask those questions and get those answers from people that understand them. Now, I had somebody call and leave me a voicemail that said, I've gotten through some of your book and I just wondering if this is true. Well, first of all, we need to finish the book. There's podcasts to listen to, right? So again, if it wasn't legit, I would be in jail. I mean, after all, I do live in North Dakota where they take things like this pretty seriously because apparently we are the number one state for fraud in the insurance industry as a whole, which is really extremely disheartening if you ask me. But nonetheless, that's the statistic according to the insurance department. And so you need to do your due diligence and not just listen to all the noise. Because if it wasn't legit, if it wasn't legal, it wouldn't have been around for the last 200 years. I'm not teaching you anything new. I'm not selling you anything new. It is an extremely old concept that is just bringing itself to head again because it has been buried for years and years and years, decades. Okay. We have just not heard about it because most of the people that did it are gone and they never told us about it, right? That brings up another subject. They never told us. Our parents, our grandparents, our great grandparents never said what they did and why they did it. They didn't teach us about finance. If you are not going to teach your kids about finance, this is what it looks like. People are going to have to do it on their own. They're going to have to find it on their own. If our great grandparents actually told us that they had whole life, do you think we would still be using it? Possibly. If we wouldn't be using it, we would have at least heard about it. It's no different than CDs. The young kids of today do not know what CDs are. Your millennials and Gen Zs, most of them did not know what a CD was until the last 12 months. And all of a sudden, they know what a CD is because now you can go to the bank and get a 5% CD. Prior to that, it wasn't worth talking about. So we just quit talking about it as a family. We don't pass on the financial information that we know, which then keeps the entire family in that position until somebody goes to research it and then they are the idiot and they're being taken advantage of. I mean, think about that. The families that are wealthy because they teach people. They teach the next generation. They include them. If you don't want to be included, that's your prerogative. But as a parent, it is also your prerogative to teach them about money. Not everybody is motivated by money. Not everybody wants to learn about money. But this wouldn't have been lost if we would have had this open dialogue and this communication. So something to think about. I'm not here just trying to justify it. I am here explaining to the best that I can of why people don't know. I mean, I love the concept of money. I love creating wealth. I always have. I was reading Robert Kiyosaki stuff at 23 years old. I was always trying to figure it out, but I had never heard about this. I was reading everything about the stock market, everything about real estate, but I had never heard about this. Why? I could have just easily said, "Oh, then that's not legal." If you're listening to somebody that doesn't want to take the time to learn alongside of you, then you're wasting your time. Move on. There are thousands and thousands of people doing this and it's working. And remember, I did a podcast not so long ago about why this wouldn't work, and it's a human error is the main reason this is not going to work. And that is you not doing what you're supposed to do correctly with your policy. That is why you need people like myself to help you with that. If you guys have comments, questions, concerns, you can let those on themjhotline.com. You can go there, leave me a voicemail, or you can email me, maryjo@withoutthebank.com, and that will get to me as well. Let me know if you need anything, comments, if you have ideas for podcasts, whatever. I'm happy to take them all. I will get back to you. If you have a comment that doesn't need a response, I may not respond. But most of the time, 99% of the time, I am responding. All right, you guys, have a fantastic rest of your day, and I hope this helped.